What if I told you that your bank might not even legally own your mortgage? Most homeowners assume they owe their lenders, but the reality is many banks can't even prove that they have the legal right to collect your mortgage payments. In this video, I'm going to be breaking down how mortgage loans are securitized, why banks often prove you owe them money, and how you can challenge your mortgage debt the right way. Now, I've helped countless people through my complete debt guide. It's in the link in the description. I've helped many people understand the aspect of debt validation, debt consolidation, debt manipulation. You dig me? And I wanted to do this video because I just did a video on rent payments. So I figured let me do a video on mortgage payments. If you want to watch that video, that's my last video. So go to my channel, check it out. I may put it here somewhere. But this is specifically for mortgage debt, and what I'm about to talk about is going to be groundbreaking, okay? So make sure you guys are watching to the end, okay? Another thing I want you guys to do is to hit the like button, feel me? If you invest in me, I'll invest in you. You dig me? I'll keep putting out more game. I see you guys showing a lot of love in my previous 2 videos. If you keep showing me love, I'm going to keep showing back love to you. You feel me? One day these videos may not be visible, if you get what I'm saying. So appreciate it while it's here. You feel me? Treat me like LeBron James, man. Appreciate me while I'm here. You dig me? And I don't say that to scare you guys. You know what I mean? But a lot of times this information just passes through the algorithm, and it'll be a point in time where I say, look, man, I don't really care about posting this stuff anymore. You feel me? So let's get straight into it. Okay. Also, leave a comment. Subscribe if you're brand new. Let's dive into it. So let's talk about how mortgage debt is created and sold. You dig me? When you sign a mortgage, you think the bank lends you real money, but that's not how it really works. Okay. Instead, banks use fractional reserve banking, which we talk about based off the Federal Reserve Act, Section 16, meaning they create credit out of thin air. Okay. And they sell your loan to a secondary market within days. So when you think of a mortgage, the mortgage being, and when you think of a morgue, right, that's typically a place where they put dead bodies. And I won't tap into that too deeply, but understand it's a similar aspect, or, these words have meanings. Okay. So one key point is that once your mortgage is sold, the original lender no longer owns the loan, but they still try to collect payment from you. Okay. So what happens behind the scenes is your mortgage is bundled with others and sold as mortgage-backed securities. You dig me? So banks use your loan as a financial asset but don't hold the original promissory note. If a bank can't produce the original note, they may not be able to legally enforce the debt. Okay? So back to if it's a mortgage-backed security, we understand that if it's a negotiable instrument, then they use it as collateral. And if they use it as collateral, then it became money to them. And they shouldn't be collecting on money that was already given to them. I talk about this all the time and say that under the fractional reserve banking, we are essentially giving them the opportunity to create credit, and they're multiplying it. And then when they multiply it, they feel like they can double dip on us. You dig me? So here's some laws that can help you challenge, feel me, the mortgage. All right. Now, this is not legal advice. I'm about to just give you guys this educational information. You feel me? 15 USC 1601. Let's talk about 15 USC 1601, which is the Truth in Lending Act. The Truth in Lending Act is essentially when you utilize the Truth in Lending Act, the lenders must disclose who owns your loan. Okay. And usually when you challenge them on the Truth in Lending Act and tell them to provide this information, they often don't. Okay. They may send you something to make you think that is notifying you of their ownership, maybe the loan agreement or the promissory note, but that doesn't necessarily mean that they own the loan. Okay. So if your loan was sold without proper notification, you may have grounds to challenge it. And this is all under the Truth in Lending Act. It'll have different things about the definitions and rules of construction, the congressional findings, the disclosure guidelines, what disclosure should be given to you, the determination of a finance charge, the annual percentage, administrative enforcement, and all other things, criminal liability for willful and knowing violation. So part of this is when you ask them for something under the Truth in Lending Act, and they do not give you everything that you're asking for, then they'll be under criminal liability for willful and knowing violation, because they should know this as lenders. You dig me? So, and then the other aspect is if they sold it without proper notification, which is what most banks do, you will have grounds to challenge it under the Truth in Lending Act, because they must notify you of everything. Okay, there's something called a uninformed use, or as a matter of fact, there should be an informed use. Okay, and they must avoid the uninformed use of credit, and to protect the consumer against inaccurate, unfair credit billing and credit card practices. You dig me? So this all falls under credit cards and also mortgage loans. You dig me? So then we dive into UCC 3-501. UCC 3-501 pretty much talks about presentments, and the whole purpose of this, and under the UCC, the bank must produce the original wet ink promissory note to prove that they own the debt, okay? And if they can't produce it, they may not have legal standing to foreclose or even demand payment. See, when you send a presentment to someone properly asking for these things, then they must provide it. They cannot sit here and act like they don't know what you're talking about, because if you do that, I'm just going to show up in court, show them that I asked you for these things, and you act like you didn't know what I was talking about. Okay, and they are required by law, according to the commercial code, which is the regulation for businesses, to produce this information when you ask for it. Okay, now other aspect of it is the holder in due course, is when we tap into understanding whether or not they whether they have ownership over it. And the law states that if your mortgage was sold and the new part, if your mortgage was sold, the new party may not have the right to collect, okay? And many foreclosures happen without the lender proving they legally own the loan. So it's important for you to understand the fact that they must be a holder in due course. They must have proper jurisdiction, and they must own the loan if they want to come after you or collect it or foreclose. A lot of times they don't own it because of the fact that they sell it off already. So if you just got this loan and then you sold it as a mortgage, and it became a mortgage-backed security, okay, and they use it as a financial asset, you guys can't produce an original note, they're not able to legally enforce the debt. They're not able to legally enforce a foreclosure. And then we can even talk about the foreclosure fraud scandal called the robo-signing foreclosure scandal, which was a series of abuses that occurred when the bank employee signed mortgage documents without reviewing them. This practice led to the creation of false documents and foreclosures of homes. Okay, so back in 2010, and actually between 2008 and 2012, banks were caught using fake signatures to approve foreclosures without verifying loan ownership. Okay, and if the same thing happened with your loan, then it also may be unenforceable. And a lot of these practices still happen. They just go under the radar. So when you tap into the, when you start looking at these pieces that put together and not only proves that they didn't loan you money, but then you also put the pieces together where you are now challenging whether they have ownership over the loan, whether they have done it properly and not fraudulently. This is when they have to start answering questions that they are required by law to answer. And if they do not answer, then they acquiesce, and they lose legal standing to even collect or even foreclose on the home. So here's how to challenge your mortgage debt and demand proof, okay? The first thing you want to do is you want to request a qualified written request, which is a QWR under RESPA. So what is that? Qualified written request. Okay, you want to essentially request that, and essentially the RESPA, which is the Real Estate Settlement Procedures Act, allows homeowners to demand proof of who actually owns their loan. Okay, when you go to RESPA, okay, this law protects home buyers and sellers by requiring lenders to disclose settlement costs. Okay, RESPA also prohibits practices like kickbacks and referral fees. It requires lenders to provide borrowers with information about the cost of closing and things in that nature. Okay, so you have a right to demand proof under RESPA, not only under that, but also under the Treat the Lending Act. And then we can tap into the fact that when you send that QWR letter to your servicer, you want to request that original wet ink signature, okay, of the promissory note. And again, it cannot be a photocopy. If it is not actual wet ink on there, then that is not the original note. Dig me? I want you to understand they cannot send you a photocopy and prove ownership, okay? They also must provide a full chain of title showing who legally owns the debt. And they must prove that they're the current lender that has legal standing to collect payments, okay? Step 2, you want to demand a produce the note in foreclosure cases, okay? So if you're facing foreclosure, demand the lender to produce the original promissory note. Many banks can't provide it because they sold the debt and no longer own it. Okay, so if they send you a photocopy, that is a key indicator that they sold it. Or if you take a look at that document that they send you and you see stamps and things in that nature, that means that they sold it. Okay, and if they fail to produce it, the foreclosure may be legally invalid. Okay, if you get into a situation where you send this off to a loan servicer and they cannot verify ownership of your loan, file a complaint with the CFPB, okay, to your state attorney general's office and the Federal Trade Commission, okay, and essentially use SEC laws to challenge loan ownership in court. So if they can produce these documents, okay, and if the lender sues you or tries to foreclose, use the UCC 3-501 to demand the original note. Use UCC 3-305 to challenge whether they are the true holder in due course, and then build up those truth of lending violations to claim improper disclosures and demand loan modification. Okay? Key takeaway is many banks cannot prove they own your loan, and if they can't, you can challenge their right to collect payments or foreclose on your home. Okay? So a lot of people will say, well, you know, when I do that, they send me a loan agreement or all my documents from signing. How do I know that they own it? If they can produce these documents and things of that nature, how do I know? Well, this is how you determine if the bank truly owns your mortgage, okay? When you get that document, you want to make sure that that the document has, and on the promissory note, you want to look if the document has raised ink, an embossed seal, or original pen markings. If not, it's not a copy. That's pretty self-explanatory. You also want to ask yourself, did they send an affidavit proving possession of the original? A true lender should be able to certify this, okay? And does the note show any endorsements or assignments or stamps from transfers? Because if it does, they need to prove they still have legal right to enforce it. If they cannot produce the original physical document, they may lack legal standing to collect payments or foreclosure. You dig what I'm saying? If I signed a promissory note, then you should have it. If you sold it, that is on you. You cannot come after me for something you sold and made money off of, or you're using as a financial asset. If you're using as a financial asset, that meant that what I gave to you had value. So if it had value, what are you collecting on? What are you trying to make me think that you loaned me money? I'm not even talking about the fact that we already know that they don't loan us money based off the Federal Reserve Act Section 16. We already know this. Okay? We want to challenge the chain of ownership. Okay? Because we know that mortgages are sold, transferred, and securitized, you want to make sure that you ask for that full chain of title. From the origination to the current holder, all recorded assignments of the mortgage, which is called AOMs, okay, and proof of sale or transfer agreement between the lenders. These are the things you ask for. You have a right to ask for these things, and if they cannot produce it, they're acquiescing in saying that you sold it, or as a matter of fact, if it was sold, they may not have legal right to collect on the mortgage, okay, or even foreclose. And then you want to check for robo-signing and fraudulent assignments. So the red flags you want to check for is signatures that don't match across documents, assignments dated years after the loan was transferred, and mortgage transfers to MERS, which is the mortgage electronic registration system. Okay? And if there's any fraud in the assignment process, the mortgage could be unenforceable. Okay? Here's some questions to ask in order to force the lender to prove they have holder in due course. Even if a bank claims to own your mortgage, they must prove that they are the holder in due course, meaning they have the legal right to enforce the loan. So here's some questions to ask them. Did they purchase the loan outright or act as a loan servicer? Boom. Number 2, if the note was sold, did they buy both the mortgage and the note? That's 2. And then 3, has the note been securitized into a trust? If so, they may no longer control it. So if they cannot prove holder in due course based off of these questions here, they may not be able to legally collect on the debt. And if they answer these questions by lying or misrepresenting, they can be held criminally liable. So boom, guess what? If they try to foreclose on a home, or if they try to continue to collect on the debt or say that you owe them and things of that nature, you decide to sue them because you know that they don't have ownership over this. Obviously, you want to do your own reverse research, check MERS, check the UCC assignments, check and gather this information. Whatever information they send you, do your due diligence to make sure that that is the proper information. But regardless, we know for a fact that they don't have ownership over this loan. We know this, okay? And when you go in court and you show that they admitted and said that they lied to you about some clear and conspicuous questions that you asked them, that is their ass. Dig me? And a smart attorney who sees that you ask these clear and conspicuous questions, who looks at your documents and your evidence versus their evidence, they're gonna sit there and they're gonna settle. They're gonna say, you know what, you got it. Okay? So if they cannot provide a valid original note, complete assignment records, and holder in due course proof, you may have a legal defense against foreclosure or collections. Okay? So essentially, if you are facing a foreclosure, one of the things you can do is you can file a produce the note motion in facing foreclosure. Okay? You want to dispute the debt's validity under UCC 3-305 and 15 USC 1692G, which is the debt validation code. And then you want to file a CFPB complaint or a lawsuit for wrongful collection. So if they continue to collect, file that CFPB complaint. The CFPB can only do so much, but it can be able to push them to be able to take action differently. But also at the same time, when we look at any situation, in order for you to fully enforce anything, is you have to take them to court. It's not going to be something where you're going to be sitting there screaming at them and sending them letters all day and they're going to comply. They're going to still try to collect. They're going to still try to get you to acquiesce. They're going to still try to get you wrapped up in a jurisdiction because there's legal loopholes to get you back to paying it. Okay, you agree once you acquiesce. You agree once you pay it. You agree when you start to do what they ask you to do. And at the end of the day, you want to take control. You want to be more offensive versus defensive. And if you are offensive, then you can get ahead of the game, put yourself in position to where you are in control of the situation. You have to understand the administrative process. You have to understand how to be able to challenge the companies. You have to know what to look for when you ask for these things and know what is considered not what you're asking for. And if they don't give you what you're asking for and they still try to collect, take them to court. Consult a legal professional, okay? And also, I will say the bigger the debt, the more that you're asking for, definitely be willing to get legal representation, but do the work first before you do get the legal representation, because there's some lawyers out here that will charge you $2,500 a month and all they're doing is doing the shit that you can do. Okay, you can write these letters yourself. Okay, get comfortable with writing these letters. Okay, you don't have to know every single thing and quote all these laws, but you do have to know these laws. If you do know these laws and you're doing extensive research on these laws and to have a full understanding of these things, you watching my videos on a consistent basis so that you can have a full understanding of these things, then guess what? You'll have confidence and you'll start writing these things out. You'll start researching the things that I'm talking about right now and going and doing your due diligence. Okay? Even if you have to get on, even if you have to read books and things in that nature, even if you have to practice writing and get templates and read different templates. And to complete that guide, I have many different letters that challenge companies on mortgages, challenge companies on billing errors, challenge companies on whether they validate the debt. And this is not something that you go and you just send immediately. These are learning tools that when you actually read this, you can be able to understand what to write for yourself, what to ask them for. And the key thing is, yes, you can send these templates, but you got to know exactly what you're supposed to be getting back. A lot of people send these templates, a company sends them a photocopy back, and they think, oh man, they proved it to me. That is not proof. You sent me a photocopy. You sent me, anybody can make copies. I can make a copy and say I own the loan. I can send it back to you and say, well, now I own the loan. Dig me? No, you need to provide the original wet ink signature. And if you cannot provide it, then I don't owe you shit. Dig me? And I would love for you to take me to court and try to foreclose, because guess what? I'm going to show that you were bullshitting me this entire time, that you sold my mortgage as a and use that as a financial asset. And because you have done that, that's your ass. You're making money. Not only did you make money when you used my signature to create credit out of thin air and multiply it 10 times, but you also made money by selling my mortgage. And then over this time, you've been asking me to pay you payments when you guys have already sold it and made your money. Triple time, quadruple time, 10 times what I even signed for. And again, the sources is the Federal Reserve Act, Section 16. The sources is modern money mechanics. The sources are all the laws I quoted today. Okay? But if you wanted to learn more about this, down below I have to complete that guide. It's only $47, man. If you tap in with me, you invest in me, I can keep posting content like this. It will bring understanding. It has all the templates. It has all the different learning resources and tools. And it's only $47. There's people out here charging thousands of dollars for the information I'm giving you right now, when you can literally go grab it for $47. Only reason it's $47 is because I put work into that, okay? And I'm putting everything in one place, but it's only $47 one time. Dig me? It's gonna be at some point, that stuff is not gonna be available, okay? So, and I'm just putting that out there. I'm not manifesting it. I would love for the stuff to be out there, but they they have ways to crack down on this information. I'll say that, okay? So take advantage of it. Make sure you got it for a lifetime. Also, at the same time, if you're brand new, like, comment, and subscribe. Okay, put down below what you want to learn next, any questions about this video. And more importantly, man, I want you guys to check out my links down below. Not only to complete that guide, but if you want to work with me one-on-one, you can go ahead and apply to work with me. There's also SoloSuit down below. SoloSuit, you can be able to essentially challenge debt. You can pay a fee and you can challenge debt. And then more importantly, man, I post daily content. Okay, so check out my Instagram page. Make sure you're subscribed. Turn on the post notifications, man. And if you made it all the way to the end, you are a real one. Comment the word discharge, and I'll see you in the next one.